All right, welcome back. You're still watching Closing Trades right here on ET. Now, just getting Sandeep with his specific recommendations this afternoon. Sandeep, what would be your picks in the last half?
A buy in DLF, stop loss 210, target 223. A buy in On Mobile, stop loss 4150, target 46. And a sell in Hero Motocorp, stop loss 1925, target 1825.
All right, Sandeep, thank you for those trading ideas. G. Chokhalingam, Executive Director and Chief Investment Officer with Centrum Wealth Management, joins us now. Mr. Chokhalingam, good afternoon to you. Thank you for joining us. On a day when globally nothing has moved, Asian markets have closed with a marginal downward bias. European markets have opened with a marginal downward bias. US futures are also going nowhere. What explains strength in India?
In our view, there are two factors which explain the strength. One, the fear on monsoon is receding. As of yesterday, the monsoon failure is only 16% deficit in terms of the cumulative rainfall. And also, if you look at the area under Kharif crop, on year-on-year basis, the area sown under Kharif crop is down only by 9%. So, about a couple of weeks back, it used to be, the deficit used to be as high as 31%. So the fear is receding on monsoon front. Of course, it's going to be a failure, but the impact may not be a disastrous one on agri sector. And two, still market is living on hope. As we have been saying, there is no choice for the finance minister. He has to do something on FDI multi-brand and also the reform bills on pension and insurance sector. Of course, we believe that banking law is getting delayed. So these are the two factors we believe that helping the market to hold on.
In terms of stock-specific recommendations, Mr. Chokhalingam, what are you recommending, especially from the broader universe of stocks?
There are many. I just can share a couple of stocks. We will continue to like private sector banks. In fact, the negative news coming from SBI, we used to accumulate private sector banks like Axis Bank and Karur Vysya Bank. Then we continue to play on mid-cap IT and mid-cap pharma stocks. If you want, I can share mid-cap stocks.
Yeah, please do that.
In mid-cap IT, we continue to buy Polaris, which is available at around just 4-5 PE. The cash on book is 1/4 of the market cap. And even the Q1 results are very robust. And in mid-cap pharma, we already made a good amount of money. So I would I won't repeat. Rather, I would talk about Vaith Lab. We think Vaith Lab would reward handsomely because we expect Vaith to be amalgamated with Pfizer at a much higher valuation. The valuation gap between Pfizer and Vaith should reduce going forward.
Vaith is a very, very liquid stock. I mean, you try and buy 5,000 shares, the stock will go by 15%. Does it make sense for retail viewers to buy such a liquid stock?
Retail investors have always advantage which institutional investors do not have. Retail investors should buy them, whenever the market is weak or the stock is weak. Because in my learning, one thing is very clear: the risk doesn't come from the liquidity. The risk for the stock comes from the idea itself. If the idea is not successful, liquidity will never improve. For instance, if you look at Unichem Pharma, which I covered long back in your channel, today, as of now, the liquidity has increased to several lakhs, which used to be illiquid counters. So therefore, I suggest, you pick up when the market is weak or the stock is weak. So that's a great way to pick up and play on good fundamental stocks.
What's your top recommendation among large caps at this point?
One, as I said, Axis Bank. Then we continue to buy Hindustan Zinc because we think the zinc surplus will get eliminated next calendar year. Tactically also, it cannot be part of any restructuring by Vedanta Group because the government is holding close to 30% stake. And third, the Vedanta Group is, according to media sources, quite aggressive in buying out the government stake. We believe that all such acquisition in the past by the group were at the right time, at the right valuation. So considering all this, we continue to recommend strongly Unichem. And third, Coal India. We firmly believe that the government would be forced to allow more mines to be mined by Coal India. We believe there are more than 100 mines which are pending for environmental clearance. And India doesn't have enough dollar to import coal apart from importing oil and fertilizer. So these are the three top ideas.
Sure. Right, Mr. Chokkalingam, stay on with us. We need to touch base with the management of GSK Pharma. Dr. Haseet Joshipura, VP South Asia and MD India, joins us on the show right now. Dr. Joshipura, thanks very much for taking out the time. Sales have grown about 16% year on year. There's been an 11% PAT growth. So what has been the key growth driver in this quarter in terms of the priority business, and how much did the DPCO part of the business grow?
Well, we've seen growth across our verticals. So our dermatology and vaccines business have grown strongly as they have done in the past. But our mass market and mass specialty businesses have also grown strongly this quarter. So I think we've seen growth across.
Right. Mr. Joshipura, may I just urge you to stay with us? I'm just going to cut to the conference call of United Breweries because the management is talking to analysts and they're also addressing some investor queries.
Year ended March 2012, where the variable costs were at 44.9% of sales, which is comparable to that of the current quarter, as both include the results of the amalgamated entities. So I think for the next quarters, when still some of the merger impacts are seen, it is much more comparable to take the full year results on margin-wise to have an insight in the performance. So if you do that, you see a reduction of variable cost by about 140 basis points, which is like-for-like improvements. If you move into the different cost items, malt, one of our key costs, was up due to higher barley prices. As this is still the stock of last year, because of the lower growth, we still have some stock remaining. Currently, we are procuring the remaining requirement for the year. And during the Q2 results, we'll be able to inform you on the barley procurement cost for the year. But still, the key driver for our improvement in variable cost is the UB logo bottles, and it's continuing to help us to offset to a very large extent the other input price increases. And the total increase on a per case basis is significantly below inflation. Moving to fixed cost, our staff cost during the quarter was almost 49 crores compared to 32 in the previous year. The largest extent, this is on account of
the management of United Breweries talking about their earnings in this quarter, and also fielding questions on how they've been able to maintain margins. 9% up in this session. Dr. Joshipura is still with us discussing GSK Pharma's numbers. Dr. Joshipura, you were talking about the contribution coming in from various business lines to the top line in this particular quarter. Could you break that up for us?